Procter & Gamble's third quarter results just crossing the wires. Earnings of $1.52, topping estimates of $1.41. It's on revenue of $20.2 billion. It's a slight miss. Procter said its growth in the domestic market was driven by volume in the March quarter. The company also raising its full-year EPS growth guidance. And here with us now to break down that report, Jon Moeller, Chairman, President, and CEO of P&G. Let's talk about it. Stock, by the way, relatively flat on the back of that news, John. But speak to it in terms of what you're seeing more broadly in the economy and what this last quarter says, and maybe what you're starting to see coming up next in terms of the strength of the consumer.
Well, on a global basis, there continues to be, as you're very familiar with, a lot of volatility, a lot of divisiveness, a lot of tension. But the execution of the strategy by the team is overcoming all of that. So you mentioned, or you referenced sales growth in the quarter, 3%, 8 of 10 categories growing. We built volume share, we built value share. Importantly, 11% earnings per share growth, 18% on a constant currency basis. And we just increased our dividend by 7%, making it the 134th year this company's paid a dividend, the 68th consecutive year they've increased the dividend. And as you mentioned, we're able with those results to hold our guidance for the top line and to improve it for the bottom line. So all in, beautiful execution of a winning strategy by the team, which is overcoming many of the challenges that we face. One of the big questions that was out there relative to the health of the consumer was volume, with the amount of pricing that we had to take to overcome increased commodity costs, what would happen to volume. Volume in North America in this quarter, plus 3%. The last 4 quarters, plus 2, plus 3, plus 4, now plus 3. The same general dynamic in Europe, with volume up 4%, sales up 7%. So sorry for the long-winded answer, Andrew, but it's a complicated but very encouraging picture.
Well, let me just speak to the challenge of this, though. We were talking to Andy Jassy just about a week ago from Amazon, and he said one of the things that he's seeing is the trade down, is that consumers are trading down when they can. Are you seeing that in your business?
We really aren't. One of the metrics that we look at to assess trade down is the progress of private label shares. They're up modestly in the U.S., they're flat in Europe, and in both cases, we're growing share, both value and volume, ahead of that pace. And you know, why is that? I'm certainly not denying the reality that others might see, but we've concentrated our portfolio in daily use categories where performance drives brand choice. So as long as we can bring a product to market that performs noticeably better in a noticeably better package, is communicated effectively, that creates value that overcomes some of the pricing. And we try to combine those things. So we bring innovation to the market as we bring pricing to the market. And thus far, that's been a winning approach.
Your portfolio is diverse, though, John, and I'm wondering if there are certain categories in which you're seeing more pushback from the consumer than others, if you're seeing volume growth not as strong as in others, which would imply that consumers are looking at those price increases and thinking twice.
It's a fair question. The dynamics, though, are pretty similar across the categories. I mean, the growth rates, volume to value, may vary by 2 or 3 points. But generally, the dynamics that I expressed hold true across the portfolio, and generally across markets, with some notable exceptions in very tough markets like Argentina, Nigeria, Egypt, Pakistan. But as I mentioned, volume growing and value growing in Europe, volume growing and value growing in North America, the same in Northeast Asia. China is down a bit as the market continues to struggle, but even there we're seeing sequential improvement quarter to quarter.
In terms of, is there a market right now that you're excited about? I mean, it sounds like every market we're talking about is challenged to one degree or another.
I'm very excited about the U.S. and the progress the team is making there. I'm very excited about Europe. 7% growth in a very mature economy is wonderful to see, and I think there's a lot more there. The same in the U.S. When we bring products that make a difference to consumers' lives and do it better than anybody else and price them affordably, the opportunity is endless.
Jon, you're one of the largest advertisers in the country, and so I always like to talk to you because I think we have lots of executive CEOs who run either big tech companies where you buy advertising or big media companies where you buy advertising. What do you see working? What do you see not working right now?
Well, we have a better array of tools and channels available to us than we've ever had in our history. And so advertising can be both more efficient and more effective. If you think about a product like Vicks cough and cold medicine, when we just had the tool of linear TV or radio, it was very difficult to efficiently advertise because unless you had a cough or cold or your child had a cough or cold, you really weren't engaged. And so there was a huge amount of waste. And now we're able to much more narrowly target that person who can benefit from the product on that day. So as a result, returns are increasing, not decreasing. And just take the last quarter as an example. While we increased earnings per share 11%, again 18% on a constant currency basis, we did that while increasing advertising, marketing, comprehensively defined, by 15%. The same dynamic last year. So this is a good environment for advertisers. Now, of course, there are some things that, some challenges that we have to overcome. But if we can do that, we have better and better tools to communicate to consumers every day.